Macron.
Good morning, everyone. It is Wednesday, the 21st of January. I'm sat here with none other than Axel Rudolph.
Without sunglasses.
What do you think? I'm taking the lead from President Macron.
Yeah, very cool.
Did you watch the speech yesterday?
I didn't, no.
Let's have a quick catch up for those of you that are just tuning in. Good morning, Faratak Sawadika, all the way from Thailand. Billa Davis as well. Gavo, long time no see. Billa Davis, greet some of the other people there. Axel, look, they're all waving at you. Jugger, Money Greek, and I, Derek, as well. So welcome to the show where we get you across all the moving news. Of course, over the last couple of hours, we saw Macron wearing sunglasses indoors in Davos. I've got that on my screen right now, if you want to show that. And essentially, what was going on is that he had made a speech, good on him, talking about how things may move slower, essentially. Things may move slower in France, but at least they've got predictability and rule of law. And he was talking about this on the eve, of course, of a particular person that's set to speak today.
Yes, and it was very embarrassing for, well, it actually wasn't embarrassing in the end, but this certain person you just mentioned, President Trump, leaked a memo that President Macron had sent him, and luckily he was basically saying the same things in the speech as he was in his leaked memo, which was about the G7 meeting to sort out this situation with regards to Greenland, which everybody's obviously talking about. And I'm sure President Trump will talk about again today. Mm-hmm. And hence we've had this very sharp sell-off in equity markets. And today we are stabilizing slightly. If you look at markets, are just holding slightly lower, but sort of not falling as much as yesterday. Maybe because also what we saw in Japan is the bond market crash, basically yields rising very, very rapidly and affecting other markets. So we had 40 years, 30-year bonds in Japan hitting, or the yields basically hitting all-time highs, the 10-year yield going back to levels last seen in the 1990s, and that led to even the US 10-year yield rising to levels last seen in August. And we don't like yields rising very sharply because that can really push equity markets lower. So we'll see whether that will continue or not.
It's interesting, isn't it? Every single time we see this, it's not so much the change, but the rate of change.
Exactly.
And also, let's have a look at the VIX as Axel got us across the markets there. The VIX is still moving slightly higher, not anywhere close to levels seen back in April, but it has to be said it is creeping slightly higher there. It did at one point spike towards the 20 intraday, reflecting a jump in demand for downside protection, but it has eased off now. Some of the really interesting things to watch out for, of course, other than that speech from Trump a bit later on, is that we are also expecting more details on what's going to happen surrounding Greenland tariffs. Let's have a look at the market. So overall, just holding on there and FTSE near the neutral territory. Let's have a look at the individual movers for you. And let me just click that and refresh it. There we are.
So yes, Insurance Admiral Group up here, Experience BT Group. Actually, it's quite a mixed bunch, isn't it? We haven't seen what we saw last week, for example, defense stocks being the leaders here, even though the situation is still tricky. But I think everybody's hoping for President Trump to back off once again.
The taco.
Exactly. So he, in my opinion, and I don't know what's going to happen, obviously nobody does, but I think what he'll do today at Davos, he will make his speech, talk about the same things he did on Truth Social, saying that the US needs, for security reasons, Greenland and so forth. And then in the background, he'll make deals with everyone to try to get access to the rare earths and minerals and all the rest of it. So that's what the market is hoping for. That's why it's not selling off as drastically as it could have done. Having said that, if you look at the NASDAQ 100, it is actually underwater year to date now. Whereas if you look at the Dow, that's still slightly in positive territory. And if you look at Asian markets, they're actually doing quite well because the Japanese market, the Nikkei 225, is still doing better than it did at the beginning of the year because it had very nice up move there, and it's still holding. But yes, today on the FTSE, it's just wait and see, isn't it?
It is. And also what's fascinating is that for those of you that have seen that Kobe EC letter, which also points towards a tackle, in fact, it's a step-by-step, what's happening on this Trump tariff playbook. It's a really interesting read. I am not for it or against it. I'm just saying it's interesting that there's almost like this playbook which Trump repeats over and over again. Say something that you're going to do that's really controversial. The entire world is aghast. World leaders come to the table, and then he gets some sort of deal done, right? Some sort of deal, and the actual initial threat is not carried out.
Yes, that is true, but
we're dealing with someone who is very, very inconsistent, and anything could happen.
Exactly. And the worry is you don't want, for example, the yields to spike further because of other things he said on top of what's going on in Japan at the moment. Because if you look at going back to yields, if those rise very, very rapidly, as they have done the last few days, last time it happened was in April 2024, when Trump threatened the world with his tariffs. And it got so bad that basically we nearly had a financial crisis in the US. And that's why he backtracked. And then we had the big rally, the plus 9% day and all that. If you look back the year before that, we had the regional banks in early 2023, I think, in the US going bankrupt because of higher yields. And basically their bond books just declined in value very rapidly. And that led to defaults. And the Fed had to step in and save everyone. The year before that, September 2022, we had Liz Truss. And we saw what happened. And I think we're still paying in the UK the price for that.
Yes.
So Trump is not going to help the bond markets by making these comments today. Plus, what I find interesting is for the first time, some European countries, some voices, we're talking Denmark here, we're talking Belgium, France, are actually starting to say, hold on a second, this is going too far. Because the alliance that has been in place since the Second World War might break up, and maybe the Europeans need to say, well, fine, you give us the threat of tariffs, but we're going to retaliate and put tariffs on American companies.
So do you think, Axel, this is the time then? This is the time, because we talked about this yesterday with Chris as well. If not now, then when? When Europe draws a line and says, enough is enough, we're going to hit back and draw the line, and you're not going to. Thou shall not pass.
I believe it might be the case. The problem is we have still some leaders who are reticent because everybody's worried about Trump. And the question is, can the Europeans agree? That's always the big question in Europe, and he knows that. Because if they don't have an agreement of all of the European nations, then there isn't a deal, or there isn't a sort of a pushback that they can agree on altogether. So they need to be united, and they aren't yet.
And let's have a quick look across to the winners. We've got Helion, we've got Anglo American, Endeavour Mining. We talked about this earlier. Lots of mining names. Antofagasta, first stock I ever traded. Copper, also higher there. And also Pulsar, yes, up 28%. That thing has lift off, people. I have a small position in Pulsar, but that was after, not before, talking to the CEO. And we also have a lot of other miners in play. No surprises there, given that all of what we're seeing play out in geopolitics now is also particularly to do with materials security. Having a cross to Germany now, let's have a look at the losers first.
Well, Bayer, which is biotech and pharma, basically. Deutsche Telekom, Infineon, which is tech. That's not surprising given the sell-off we saw in tech in the US yesterday. That's just an overhang here for the European markets. Deutsche Börse, Commerzbank, banks, or financials have been sold off very aggressively also by funds. A lot of pension funds are very aggressively selling financials because they are quite worried about the whole situation now. With regards to the yields and also the political, geopolitical situation we find ourselves in.
Interestingly, the what I call the safest houses, normally real defensives, are also down. The reinsurers, Munich Re and Hanover Re there. Let's have a look at the winners now. We got Kiagen up more than, well, almost 10% now. BASF also up there. Henkel is doing nicely there, up almost 1%. They make adhesives used in everything from smartphones to plane doors. Any of those pop out at you, Axel?
Well, the car makers also slightly up. Volkswagen, Mercedes, basically, yes. I mean, it's actually quite a mixed bag, isn't it, if you look at the winners? I mean, as I say, the moves are, except obviously for Quagen, they're not that great. Look, 0.97, 0.91%, 0.87. So the markets are just waiting to see what Trump is going to say later on today, I think.
And for those of you that watched Axel and myself earlier last week on Wednesday when I said I'm de-risking, I did do so that day, and I'm keeping my powder dry to perhaps go for a bit of shopping later on, Thursday or Friday, depending on what happens later today. Joachim has got a very interesting thesis. This is Joachim Clement from Panmure Liberum. He says every time you see the German car makers spike lower, it's a buy the dip for him, because the German industry and the Germans are never going to say, let Volkswagen, you know, disappear. They're always and to support these big jewels in the crown, as it were. And we're going to see and he says there's already a realignment in the whole combustion engine versus EVs. And yes, they're going to support EVs, but they're not going to, you know, even though they're slow at coming to the EV game, they're going to still be supported. And at some point, they're going to deliver those cars that are going to rival the Chinese ones. What do you think?
Well, they're not going to. Well, they're going to try and rival them, because obviously Chinese ones are much cheaper. And if you look at BYD, and I've driven some of these, I'm actually quite impressed, to be honest.
Which one did you try? The Seagull?
Yes, I mean they are good. They're good cars, and they are much cheaper. Even though we put 100% tariffs on those cars, but obviously you're not going to be able to buy a Mercedes at those sort of prices. But having said that, it's always been the case that people who buy a Mercedes, a Porsche or BMW, do so because they like the German quality, they like the brand, they like that sort of car, and they're very faithful to those makes. So
reliability.
Exact. Well, also because they like the way they drive. So you're either a German, most people.
X5 makes me angry. It makes me an angry driver. It makes me want to drive extra quick, extra. I don't know why. Something about the way it's structured inside, the smaller, tighter bucket seats.
Well, people say that BMWs are more sporty than Mercedes, for example. Obviously, it depends which Mercedes you have. But yes, you're either a Mercedes driver or BMW driver. But if you now look at those EVs that they're producing, I mean, they're very good cars. And I think what's going to happen, people who used to buy a Tesla might now go back to the EV versions of those German car makers. So I think Joachim is right in saying that the future is no longer going to be Tesla, in my opinion, but it's going to be the traditional German car makers, which are just going to veer towards EV, and that's going to be as before. Basically, people will just be quite brand
conscious,
yes, or even very loyal to the brand. That's the word I was looking for.
Right, morning everyone. Those of you that have just joined us, we are revving forward into France now, where we also have car makers like Renault moving higher. Peugeot also 1.7% higher, not by much, but it's interesting. Edenred also topping the list there. Luxury makers, yesterday also they were higher. They seem to be having a good ride so far.
Yes, I mean LVMH, Hermes. I don't know. Yeah, is that the Hermes? Yeah, looking pretty good here.
Yeah, luxury analysts that I know always say that if you're buying Hermes or giving Hermes, you have arrived in life.
Hermes produces nice luxury goods, that's for sure.
Yeah, and in certain times you go big, you go, and Hermes, as you've many times friends had me say, that it is unlikely that the super rich will stop shopping during uncertain times. So Hermes is one that does well in both good times and bad times as well, tends to do well. Let's have a look at the losers list now.
Danone, so big food manufacturer here. And then again, banks, that's not surprising. We saw that on the DAX 40 just now. So BNP Paribas going down a bit. But also, interestingly enough, insurers like AXA, which are more sort of defensive stocks, but still, as we saw previously, they also seem to be suffering slightly. But again, not big moves to the downside. I mean, Danone is a big move, but all the other ones I wouldn't really classify as big moves here.
Switching over to the commodity space, we still see gold tracking higher. My goodness me, it seems like nothing is holding gold back at the moment. We had, of course, Peter Hambro that came sometime end of last year, and he was saying 5,000 same time in 2026, and we are actually already creeping close to that. I had a conversation with him the other day saying, could we see it perhaps even as early as Q1, Q2, and he said, at its current rate.
Definitely. I mean, I've been saying 5,000 also for a couple of years, and you know, it sounded outlandish 2 years ago, but it's, look, we're nearly there. The question is, because it's such a big round number, can we go through there straight away or not? I wouldn't be surprised if we stall there a little bit, but yeah, 5,000 is definitely an upside target. It's like silver, $100 per troy ounce is also not that far away. I mean, we're literally there. And I know people have been trying to sell into this rally sort of at $80, $85. I can't go any higher. Well, look at it. Just, you know, don't fight the trend.
We have one client that's been doing extremely well on this. And I've been trying to get physical copper. Can you imagine?
You can't.
I can't get physical copper. I have to go to B&Q to get plumbing. But I'm talking about those tollers. I'm talking about those numismatic coins. It is so hard to get it. And tin as well. I have been trying very hard to buy, you know, Cornish metals, for example. And it doesn't want big sizes. For example, I've had to break down my entry points to sometimes even £100 a pop to gain exposure slowly. Something is up there, and for those of you that cover the space, check out the communication that's been given out by the US Mint as well. Interesting reading there. There's your hint for the day. Those of you watching, loads expected today, aside from, of course, the focus on what Trump is going to say about Greenland and also the tariffs. But also, we've got a number of bits of data coming out from the US as well. Housing starts and building permits, and pending home sales as well. That will give us some read-through on Q1 housing activity. It has been weak in 2025, but could we see some return in consumption in 2026?
Perhaps. We'll have to see. I mean, we'll have to see also what the employment picture is going to look like. That's, I think, far more important. And at the end of the day, this whole situation that we're in now from a geopolitical point of view. But also, let's not forget, I mean, Donald Trump seems to be doing what everybody does when they're not doing that well in the polls, to distract his audience, basically, by everything he's doing at the moment. And if you look at the 10% cap on credit cards, now that was widely discussed by him, etc. And the deadline was yesterday. I haven't seen anything on that. I haven't seen a new law. I haven't seen an executive order. I haven't seen...
Do we have a time? Do we have a time?
Well, it was supposed to be yesterday. And if banks didn't adhere to what he wanted by yesterday, then they would be in trouble. Haven't heard anything. And yes, I mean, it's very popular because the US consumer would probably save about $100 billion a year on their credit card debts if a 10% cap were to be introduced. And I think there has been a small, I think it's called Built, a small startup company which had a 10% cap, but only for a year. So the banks like JP Morgan, Citi, they all said, they don't want, obviously, a cap because it's going to cost them fortunes and they're going to lose a lot of their profitability doing that. But at the same time, they didn't say no to Donald Trump because nobody says so, and nobody's confronting the president straight on. So it'll be interesting to see what happens there. But there's a lot going on apart from the usual data we normally look at.
And we also have, before the open, for those of you that are trading the Wall Street session, we've got Johnson & Johnson, Charles Schwab, and Prologis as well. And after the close, this is after the US close, the focus then shifts towards the next wave of large cap prints. Procter & Gamble, GE Aerospace, Abbott and Intel, just some of the names that are going to be handing in their report cards. Speaking of which, are you a fan of Stranger Things?
I haven't watched it, no.
Well, I am currently hooked on the last season. Hence why I'm looking a bit tired, because I watched I think the 3rd episode yesterday. Please tell me there are not that many more. But Netflix results, they were quite interesting yesterday.
They were indeed, yes. I mean, as you say, it's interesting what's going on there. Also the bid on Paramount, wanting to go to perhaps a cash bid in order to be able to purchase that company. So yes, I mean, I haven't really seen much follow through from yesterday's move. Have you seen the pre-market here?
So at the moment, before I went to bed a bit late, it was indicated slightly higher, but that's not to say it can't be mixed, because there were investor concerns over their guidance. So they said they were going to see decelerating 2026 in terms of their revenue growth. They said that it would be 11 to 13%. Prior to this, friends, they were expecting 17%. That's what they said before. And also the broader growth stock rotation is expected, of course, tied to these tariff fears. So it could go either way. I mean, before I went to bed last night, quite late, after checking in on the shares, it was indicated, slightly higher. But then after brushing my teeth, it was also indicated a bit lower because of the revenue versus its guidance. So we'll see. We'll see quite soon. And for the rest of the day, what's it looking like on your side?
I might think about writing an article on the whole yield situation, because for me that's still the main driver at the moment. If that flares up again, I do think we could see more risk-off sentiment, so that's interesting. I'm also looking forward to the PCE inflation data out of the US later this week. Now, I know markets don't really care about that. We prefer the CPI, but the Fed does look at the PCE inflation print. So that might be interesting. And yes, earnings, as you say, are paramount at the moment.
And on that note, we are going to love you and leave you. There'll be plenty more content here. Do catch Axel's Trade of the Week, which is No Trade. It's a very interesting watch. Also, we will have Ben Klube. You've been waiting for this, friends. The CEO of Energy Pathways. That is going to drop today. I'm going to get you a time, and I'll put that on the YouTube page and also on my Twitter. Anything, please do ask myself and Axel on ask@ig.com. Right, whatever you're doing today, make sure you have the odds stacked in your favor.